Vidya, listen carefully. A financial instrument is a physical or electronic document that has intrinsic monetary value or transfers value. For example, cash is a financial instrument, as is a check. Listed and unlisted securities, loans, insurance policies, interests in a partnership, and precious metals are also financial instruments. A contractual obligation is also a financial instrument, as is a deed that records home ownership.
Contractual obligation?
Yes, Vidya, it is a written contract, the terms of which are to be necessarily followed by the contracting parties. It is often enforceable by law and tradition. For example, when you buy currency in forward market, you are obliged to buy it at the time and rate contracted by you. Understood, Vidya?
Yes, Baba.
Vidya. Further, checks and other paper-based instruments, and to some extent electronic instruments, have become important modes of payment in recent times in most countries because of growing financial intermediation.
Okay, sir.
Now let's understand the payment mechanism. It may work like this. Individuals, business entities, or governments issue checks or other forms of order on their banks in discharge of their payment obligations. The recipients of these orders would then present the payment instruments to their own banks, and the recipient bank would coordinate with the issuing bank to transfer the amount in the account of the recipient, which the recipient may either withdraw cash or issue checks to some other party to make payments. As the number of banks grew over time, the volume of instruments exchanged among them increased substantially, and a common set of practices and mechanisms of exchange had to be evolved. When instruments presented by customers of banks become payable at outside locations, special collection arrangements are required to collect the funds. If the collecting bank has a branch at the relevant outside location, there would be no problem. But if the collecting bank does not have a branch at the outside location, it will have to enter into correspondent banking relationship with another bank at the said outside location for the purpose of collecting funds.
What do you mean by correspondent banking relationship here?
Vidya, a financial institution often provides services on behalf of other financial institution. This is called correspondent bank relationship. A correspondent bank can conduct business transactions, accept deposits, and gather documents on behalf of other financial institution.
Okay, Baba.